In these next couple of videos, I'm going to talk about the 4 pillars that make up an effective budget. And they are pillar number 1, your income, pillar number 2, your fixed monthly expenses, pillar number 3, your variable monthly expenses, and pillar number 4, your irregular expenses. If you can nail all 4 of those, chances are you've got a pretty dang good budget. Let's talk about pillar number 1, your income. Now, not all income is created equal. For example, if you are self-employed like I am, you pay taxes very differently than if you are a W-2 employee. It's really important that when you're building your budget, you want to use your after-tax income. You do not want to be planning your expenses without taking into account how much you're going to owe in taxes. So always make sure you use your after-tax income. Now, maybe you have multiple income sources. I'm going to talk about how to use both of these in a budget. Let's say you have just a regular paycheck. You get paid every 2 weeks or every Friday, whatever it is. That one's pretty simple. You can just use the number that hits your bank account, and that's going to be the number that you want to use for your budget. So if you get paid $1,000 every week and $870 hits your bank account, then you do 870 times 4, and that's the income that you use for your monthly budget. The second type of income is going to be maybe income that's irregular or income that fluctuates. So for example, maybe you get paid on commissions at your job, or maybe you have a side hustle and one week you might make $200 and the next week you might make $3,000. For that type of income, you want to find basically an average of how much you're going to make on a monthly basis. And if you use the budget tracker in the comments, I've actually broken out a tab where you can calculate this. Basically, just input month to month how much you make. So January, $500, February, $1,000, March, $700, and take the rolling average. And that's what you can use to kind of calculate how much you should incorporate into your budget. Now, another question you might have is, what if irregular income is my only source of income? Maybe I'm in a 100% commission-based job. If that's the case, you should go through and build the rest of your budget first and then come back to the income column. And what you can do in this case is find out what your minimum monthly expenses are. Maybe you decide, okay, I've filled out the rest of my budget. My minimum family expenses are $6,000 a month. And I know that my income could fluctuate from $4,000 to $10,000 a month, just depending on how many sales I make, right? What you're gonna do is basically have your paycheck go to one account, and then you're gonna pay yourself a salary from that savings account to your checking account. So for example, January you make $4,000, February you make $10,000. Now you have $14,000 in that savings account, and you just set up an automatic transfer for $6,000 a month to your checking account. And that's the income that you're going to use for your budget. So regardless of what your income situation is, there's a way to make it work and kind of standardize it so that you can start to account for things on a monthly basis. Now that we've talked about income, let's go look at expenses.